What's going on, guys? We're back with another Trust the Process recap for today. Today is Monday the 23rd. Now, uh, considering, the series of events, the headlines, this, that, and the other, pretty smooth price action. There was a point in time in today where the price action, in terms of range, average true range really started to expand. But, if you were on the right side of the trade for most of the part, you should have been able to catch a few good scalps. Let's go ahead and kind of retest some of these, recap some of these 20 SMA trades in correlation to some of the supply and demand zones that I had. So right off the open, we had a big nasty red candle. However, failure to confirm the lows. Immediately had a 100-point candle back up that closed over the 20 SMA. Here's the only problem with this trade. The range was pretty significant, but let me show you guys what you could have done here. You could have used, okay, a stop loss right below the VWAP. Okay, how much would that have taken off from the high? 21,869 to 21,806. So about 25 points saved on your stop loss. Here's what I would have done. I would have put the stop loss in the middle of this range somewhere and told myself, if I take this 20 SMA trade, which I did not, I let it go. It was too big for me. But if I did, I would put it in the middle of the range and tell myself, if price action breaks above and then closes back below the 20 SMA, get out of the trade. That would have probably tightened up your stop loss by 60%. I let that trade go. Okay, I didn't take part in that trade, but I have to recap it. It is part of our strategy. The next trade that we were really looking for here was a 30-minute opening range. Okay, the 30-minute opening range that also broke above your daily 10 SMA. Here's your stop loss on something like that. You're going to take the candle that breaks above the daily 10, which is your supply zone. That's a 30-minute opening range break. You're going to use that entirety of that candle as a stop. This whole range here is your stop loss zone. You're trading above the 20. You're trading above your Fibonacci. You're trading above your daily 10. This trade was an easy winner there. Going to our next 20 SMA setup, it was right here. It was a short position that trickled, got rejected 3 times at your daily 5. Okay, so if you're not running your daily moving averages, I would suggest that you start running at least a daily 5 and daily 10. The range on this short, again, was not that small. So you have to take into account it's 40 points. If you were trading one micro contract, you were risking $80. In a situation like this, I might be comfortable, and I did take this trade. I was comfortable with 3, okay? So I started the trade with 3 micros. But something like this, if you want to keep your stop loss between $100 and $150, I would say, when you're giving up 40 points, you're probably going to want to stick to 2 micros. And again, you can take profits in a couple of different areas. So you can take half of an ATR, which would have been 20 points. You could half of the range, which would have been 20 points. You can look at the ATR and take half of that, which the ATR was 30. So you could look for a 15-point take profit. Now, I got into this trade. There was a little bit of drawdown, okay, because it did bounce. A little bit of drawdown. We're still inside of our supply zone. And then finally, we washed out into that daily 10, lost it, and you would have taken your profit. So that's a winner there. This was a winner here. Again, this was a tricky trade, but the 30-minute opening range was very, very clean. That was an easy winner. This was a little bit of drawdown, and then it turned into an easy winner. And then also, once you broke through this daily 10, you could tell yourself something like this. If we break through the daily 10 and confirm, you're going to use any closure back over your daily 10 as a stop loss. We're trading below the 20 SMA. This right here was an easy scalp into VWAP. Okay, same thing too. Here's another trade here. Once you lose VWAP, okay, which is the yellow line, you close below VWAP, you treat it the same way as a 20 SMA, you get in on the confirmation flushed. Okay, you can see my box here for this reclaim of this 70% retracement was on there, but that's a little bit more of a trickier trade if you don't run the fibs. Here's your next long setup in terms of 20 SMA. Okay. Again, you're going to notice that the ranges today were a little bit bigger. This is a 60-point range. So on one micro contract, you're essentially giving up about $100 to $125 on this trade. You're going to really have to manage your stop losses, you know, pretty tight to the vest in terms of your position size. So I don't manage my stop losses based on the number of points. I manage them based on how much am I going to lose if this trade fails. And if this trade fails, it would have failed for 60 points. So in this particular case, if I go in with one micro, I'm losing about 120 bucks. If I go in with two micros, I'm going to be down about 250, 260. I'm okay with that. Okay. I'm okay with that. Again, this specific range was about 58 points. So if you were looking for half of the range, you're looking for about 25 to 30 points. If you're looking for half of the range on the ATR, it's the same. It's about 20 to 25 points. If you're looking for a quick scalp, 10 points, you would have got it. If you were looking for half the range, you would have got it. If you were looking for a 1-to-1, you would have got it. And that was it, guys. So essentially we had one winning 20 SMA short. Here's another winning 20 SMA long. That's 2. And then you had the first one off the bell. Again, big range here. Very tough to kind of take that one. But technically speaking, it's a winner. And then your 30-minute opening range was a winner. This was about 3 to 4 trades. All of them were winners. The ranges were bigger. All that tells us trade smaller number of contracts and you'll be okay. Hopefully you guys made some cash today. I'll see everyone on the trade floor tomorrow.